Have you ever wondered why the number on your bank account balance goes up, but it feels like your purchasing power is shrinking? Hello, smart retirees. In today's world of unpredictable inflation, merely saving money in a bank might not be enough. In fact, your money might be losing value every day. But fear not. In this video, we're uncovering 7 assets that can be your shield against this wealth erosion in retirement. Let's dive in. And hey, if you find this information valuable, consider giving us a thumbs up and subscribing to our channel for more financial wisdom. Number 1. Timeless treasures: gold, silver, and platinum. These aren't just shiny objects, but timeless stores of value, especially in an era where government-printed currency floods the market. With central banks constantly printing more money, the true value of currencies like the dollar is always at risk. This is where precious metals come into play. Look at gold, for example. Back in the 1950s, an ounce would cost you about $40. In 1990, gold was just $400 an ounce. And in 2010, it was around $1,200 an ounce. Today, over $2,000. And experts predict it could climb to over $10,000 within a decade. That's a significant appreciation. And the best part? You don't need to hoard physical bars. Consider gold ETFs that track its price. Gold, the yellow metal, has fascinated humans for millennia. While often seen adorning the necks of our ancestors in history books, it serves more than just an aesthetic purpose. Gold is often seen as a hedge against inflation. Every time the world has seen economic downturns, gold has emerged as a beacon of stability. Let's look at the 2008 financial crisis. While most assets plummeted in value, gold reached unprecedented highs. Silver and platinum have similar stories. Though not as popular as gold, their worth in the global market is undeniable. For instance, platinum's role in catalytic converters for vehicles makes it indispensable. Its rarity makes it even more valuable. As economies expand, urbanize, and vehicles multiply, the demand for platinum is predicted to surge. These metals aren't just precious, they are crucial for our modern way of life. But let's not stop there. Number 2. Stable financial anchors and dependable global currencies. Navigating the tumultuous sea of global finances, some currencies act as lifeboats. We call them stable financial anchors. The US dollar, Japanese yen, and the Swiss franc. The Swiss franc, for example, remains rock solid amidst global economic shakeups, making it an attractive asset to hold during uncertain times. It's considered the safest currency in the world. And for those of us not jetting off to Switzerland anytime soon, currency ETFs or platforms like Forex.com can provide the exposure you need. And in today's economic climate, the emergence of cryptocurrency can be lumped into this category. For example, Bitcoin and Ethereum have emerged as a form of safe haven currency, but they are a story for another day. In an era of fluctuating markets, currencies backed by stable economies serve as financial lighthouses. Consider the Japanese yen. Japan, with its robust electronics and automotive sectors, has a reliable economy. During the 2008 financial crisis, while most assets wavered, the yen stood strong, even appreciating in value. Similarly, the Canadian dollar, underpinned by Canada's vast natural resources and political stability, has earned its place in the pantheon of stable currencies. Number 3. Essential raw materials, the building blocks of industry. We're talking about commodities such as cobalt, nickel, aluminum, zinc, and lead. They aren't just valuable, they're essential. They power our phones, drive our cars, and build our cities. For instance, the booming electric vehicle industry has pushed cobalt prices through the roof in just a decade. And while storing these metals in your backyard isn't practical, investing in mining stocks or commodity-focused mutual funds offers an easy entry. Every gadget you hold, every car you drive, every building you live in owes its existence to raw materials. Nickel, used in stainless steel and batteries, saw a price surge due to Indonesia's export ban. The impact? Global battery manufacturers scrambled to secure supplies, signaling how crucial these materials are. Cobalt is another unsung hero, pivotal for our tech-driven lives. With the shift towards renewable energy and electric vehicles, batteries are paramount, and cobalt, with its high energy density, ensures these batteries are efficient. Predictions indicate that as the world leans more into sustainable energy, cobalt's value will continue its upward trajectory. Now, midway through our journey, if you're finding this useful, please subscribe for more such insights. Number 4. Tried and tested shares and reliable equity investments. Now, for those keen on higher returns, stocks are where the game's at. While tech stocks can be volatile, value stocks offer stable appreciation and dividends. And if you're worried about picking individual stocks, dividend-focused mutual funds can be your trusty sidekick. Not all stocks promise a roller coaster ride of volatility. Some, grounded in solid business models and histories of performance, offer both stability and growth. While tech shares often dominate headlines with their soaring prices, industries like agriculture, utilities, and infrastructure provide the backbone for economies. Their shares, often overlooked, are golden geese, providing steady dividends over time. Meanwhile, mutual funds targeting these sectors offer an easy entry for average investors. With a diversified portfolio, these funds spread risks and ensure a more consistent performance. Number 5. Land and developments, the foundations of value. Real estate, an age-old method to beat inflation. The demand for land will always outstrip supply. And while most of us think of real estate late in our investment journey, you don't have to buy a skyscraper to benefit. Real estate investment trusts let you own a slice of the property market pie without the need for millions. Land, unlike other assets, isn't being made anymore. This simple supply-demand mismatch ensures its value continues to rise. Over the last century, as urbanization has exploded globally, the demand for land in prime locations has skyrocketed. Look at Manhattan. What was once bought for a few beads is now among the most expensive real estate globally. Developments on the land, be it residential, commercial, or industrial, further appreciate this value. For instance, commercial hubs like London's Canary Wharf or Mumbai's BKC aren't just office spaces, they are ecosystems. These places drive business, innovations, and in turn, economies. Their value isn't just in bricks and mortar, but in the opportunities they foster. Also, consider land near beaches, rivers, and lakes. If you can identify a community near a waterway that appears to be growing, do your homework on it. It could pay off handsomely in the long run. Number 6. Governmental backing and trust in state promises. Consider what we know as sovereign guarantee. So what's that? Basically, it's the promise of a nation. While no modern currency is backed by gold, they're backed by a nation's trust and power. This trust makes government securities a reliable bet. Look for those with strong global standings to avoid risks, like the US Treasury bills and bonds, which offer a blend of safety and returns. While most of us look at the money in our wallets as just pieces of paper, the truth is, they embody trust. After President Nixon's decision in 1971, the value of money shifted from gold to governmental promises. So, investing in securities backed by governments is like buying trust. In Europe, German bonds, known as bunds, serve this purpose. Given Germany's strong economic position in the European Union, its bonds are considered among the safest. They act as an anchor during economic storms, ensuring that your investment retains, if not appreciates, its value. Number 7. Cherished collectibles and the allure of tangible assets. Lastly, the world of collectibles. From iconic art pieces to vintage cars, these rare items can appreciate significantly over time. Platforms like Whatnot or Masterworks open doors for even modest investors to own or trade in these timeless assets. Collectibles hold a unique space in the investment world. Unlike stocks or bonds, they touch upon human emotions, nostalgia, and personal passions. Be it rare stamps, vintage wines, classic cars, or art, these tangible assets offer more than just monetary returns. They give a sense of ownership and pride. Over time, as these items become rarer, their value can substantially increase. Take vintage wines, for instance. A bottle from a renowned vineyard of a particularly favorable year can fetch astronomical prices decades later. Similarly, artwork from emerging artists can turn into valuable masterpieces, given the shifting tides of cultural appreciation. Moreover, collectibles also serve as a hedge against traditional market volatility. While stocks may plummet and currencies may fluctuate, the intrinsic value of a rare collectible often remains steady, making it a favorite for many discerning investors seeking both pleasure and profit. Smart retirees, as we wrap up, remember this. Inflation can be a silent wealth eroder, But with knowledge and diversification, you can safeguard and even grow your wealth. If you found this video valuable, give us a like, and don't forget to hit that subscribe button for more expert tips.